Good evening, everyone. Hold on, yeah, let me mute myself. All right. How's everyone's evening? Welcome to tonight's Kenanga Solar Sector Outlook. We shall be introducing Nigel very shortly. Yep. Before I start, let me share my screen as a filler before we go into the main theme tonight. Okay. Can everyone see my screen? Yes. This is a disclaimer for those that have not read the disclaimer before. This golden opportunity. Do take a phone, snap a photo, and print it out and read it. But in this investing journey, I would advise people to take one step at a time, know yourself, manage your risk. And before I forget, myself, I'm Adrian Ng. I'm a market analyst with Kenanga for the longest time, and I've been with the Insti for a while, and now switching to have a better value proposition for everyone, so that I can bridge a gap between the role of an analyst and asking the questions on the market. And I also fill you guys through on the market directions before we go into the main theme at 8. So tonight we will have Nigel. Hi, Nigel. Good evening. Nigel is our very young and uprising analyst that won the Asia Award and has been humble. So sometimes it gives some chance for other people to win also. Right, Nigel?
Yeah, I hope so.
Yeah, so that's Nigel for you. And to better also navigate to max out our performance in the market, we have Isabelle uh, in our session tonight also talking about how we can leverage up with warrants. But that is not the main point. The main point is to how to better understand the tools that we're going to use so that we can navigate and make money together in the market. Yep. So that's a disclaimer. Let me jump to the. I'll be quick, so I don't take too much of everyone's time, so that we can jump into. I shall in about. These are the awards that we've been getting in 2025. We are just updating ourselves. Recently, Finance Asia, we have back something, updating it soon. So, yep, coming to the market, there's what I do on a weekly basis. For those that have been joining my stock chart session, that happens on the first day of the week after public holiday. So it could be Monday, most of the time Monday, if not Tuesday. Yeah, Dow Jones. I will talk about the market and also stock picks for the week to where do I see things. So Dow Jones, you can see is actually forming a mini double top here where it's actually trying to push through. But if it fails, then I would see that 41585 level is one level two that should not be broken. If it breaks, poop. Yeah. So it's not savory. The war is not helping. The interest rate directions are not clear just yet also. So there's actually a bit more downside risk than upside in that context. So I will caution most of the trading participants in the market that loves to trade. You want to be a bit more nimble. You do not want to upsize for now, but to stay relevant in the market, downsize and participate. Yeah. Next, in the beginning of the week on Monday, I've highlighted that I'm expecting Hang Seng to come down, and it did come down and break through the 23332 level, 23,332. See, I'm not great at reading out five figures, So where would hit now? Where would we see that the weakness is actually there? 22,458 level is here. So for those that have interest in leveraging and capturing opportunity, you can consider the put options, the put warrants available. So you can actually check out Naga Matrix. You can hit to Naga warrants, which in your chat you can actually check out for it. The links are there. Straight Time Index is actually struggling to break through. You can see the big banks of Singapore have not been going up too crazily. But I also cover Singapore market on a weekly basis, and some of the calls, I would say there's good opportunity in pulling a good trade like Rex International. It has, I think, have been more than 50% in 1-2 weeks. Yeah. And recently, I also came out with a consensus report on Fraser Logistic and Commercial Trust at about 79 cents. Now it's doing about 85. The yield is still decent. So sometimes when we think that the market is boring, we might think otherwise if we start exploring and opening up our minds. But I'm glad that everyone is here tonight because this is where we want to learn more from Nigel. Especially, I'm a noob in the solar sector, trying to ponder how the sun works and the photovoltaic, that panel works. So if you have questions, do not feel shy. Just pop it in the chat. We shall look into it later on. So FMKLCI, this week I was highlighting that I'm anticipating it to be able to hold above the 1503 level, but the closing today is actually not encouraging. So I think the weakness is persisting and it might come down further. So if it retests, if it falls back to the 1004 level, back the first low hanging fruit I would actually look at is at the banks with good yields. That's actually my first pick to actually flight to safety, and you know that the banks are stable in a manner. So weakness can be an opportunity, but it's not a good trading opportunity, but it's for good accumulation for longer term. So coming out of the fall market reviews, right, we also have campaigns running like Wake Up to Go for our dormant clients. If you have not been participating, probably you can consider accumulating on weakness, like for say the banks, if it turns a lot weaker. Yeah, and some of or probably trade on some of the oil and gas names now that it's actually quite hot, but do be careful, the volatility is crazy. Secondly, we also have a Visit SGX campaign, which is running from the 2nd of May until the 31st of July, and you can earn some cash back, I'm whispering this. Yeah. We will be having a SGX tour. The office is quite cool. I hope you guys stand an opportunity to participate, and I'll see you guys there. And this weekend, I will be at Invest Fair. Hope to see you guys there in Mid Valley. Do come pop by, say hi, where I met you, Kenanga Solar Outlook. You want to know more? Yeah, we will be there. And our other teams will be in Pahang too. So I will not be at two places unless I can, kage bunshin a bit. Lastly, KDI Gold Rush. The KDI Gold is actually giving out, some gold coins if you stand a chance to win. But there's a caveat. You need to deposit a minimum of 1,000 into KDI Invest, and then only you stand a chance. But likewise, try out the app. You can scan the QR. I'm using KDI Save. I'm actually trying out the Invest too. But I love the Save a lot. Yes, 4%. I like to max out my money, right? So this is some of the feelers that you can check it out. And the last one is an investment is knowledge pays the best interest. And I'm glad that Aaron is here tonight. Without further ado, shall we invite Nigel? Oh, that's my chart. So let me stop sharing. Yes, Nigel, the floor is yours.
Yeah. Okay.
Thank you for spending your evening with us, for the sake of our clients and those that have been interested to learn more about the market.
Okay. Yeah. So yeah, can you see my slides?
Yep.
Okay, so yeah, perhaps maybe I start first. So yeah, so hi everyone. So good evening. So hope you all are doing well, especially with how shaky the market is. So yeah, anyway, thank you so much for being here. And yeah, we really appreciate your time. So today we will talk about the solar sector and which stock we are feeling confident about. So if you have been keeping an eye on the news, you have probably seen that the governments have been pretty serious about pushing renewable energy. So one big move was the launch of the National Energy Transition Roadmap. that has been a game changer for solar players like SolarVest, Semaiden, and Peka, and their share prices have done quite well since then. So yeah, without further ado, let's start this session. So before we start, maybe let me quickly set the stage with a bit of background on the industry. So back in 2023, the government rolled out the National Energy Transition Roadmap. So it basically sets out a plan for how Malaysia can shift towards renewable energy with the big goal of reaching net zero by 2050. So as you can see from the chart, the government is stepping up its renewable energy target, aiming for 40% of installed capacity by 2035. So up from around 27% today. So solar is expected to do a lot of the heavy lifting here. So now, while there have been quite a few initiatives to boost solar investment, we think the current pace of growth is still not fast enough to hit those targets. And given the solar is expected to contribute over 80% of the additional 11 gigawatt needed, the government has kicked off a new round of large-scale solar LSS projects, adding another 2 gigawatt to help to speed things up. So we will talk more about the LSS program later on. So to support these targets in the National Energy Transition Roadmap, the government has rolled out a few key initiatives to attract more investment into solar power. So these include the Corporate Green Power Program, CGPP, Large-Scale Solar, LSS, Self-Consumption, CELCO, and the Net Energy Metering, NEM scheme. So I will run through each of them quickly to give everyone a better idea of how they work. So first up, CGPP. It sounds complicated, but here's the gist. So companies can buy solar power virtually from solar producer like SolarVest. So without having the power delivered directly or physically to them, instead, the solar energy goes into the grid, and the company still gets their electricity from Tenaga, but they can claim the renewable energy attributes of what they bought from the solar provider, and this is done through a virtual power purchase agreement, which we call VPPA, and where the buyer and seller agree a fixed price. Usually it's around 25 to 28 cents per kilowatt hour. So it's a willing buyer, willing seller setup. So the main goal here is to help companies reduce their carbon footprint and boost their ESG profile. So next is large-scale solar (LSS), which is pretty much more straightforward. So it allows solar players to develop solar farms with at least 1 megawatt capacity and sell the electricity to the grid. So the Energy Commission manages the bidding process to select developers, and this has been a major driver of growth for EPCC players. Then there's the self-consumption CELCO scheme. This one very simple. You just install solar panels and use the electricity to generate and to cut your own electricity bill and carbon footprint. So, but you can't sell any excess energy to Tenaga. So the idea is to use everything you generate. So if you want to sell the extra energy you generate, that is where net energy metering (NEM) comes in. Under NEM, so whatever you send back to the grid gets used to offset your electricity bill. So you don't really waste the extra power. So in short, all these schemes, especially CGPP and the latest LSS rounds, are big catalysts for solar EPCC players. And with LSS 5 and LSS 5 Plus having a much larger quota than LSS 4, we expect a significant boost in project awards and order book growth for companies in this space. Okay, so now that we have seen how aggressive the government has been with its many initiatives and how strong the demand for solar is. So let's now talk about who the key players are. So specifically the peer solar plays that are listed in Bursa. So the main ones to know are SolarVest, Semaiden, Pekat, and Sunview. So all these four are mainly involved in EPCC, but each of them has its own niche. So for today's discussion, we are just focusing on the solar EPCC players. So among them, uh, SolarVest stand out as the biggest, holding around 30% market share in the large-scale solar segment, while Semaiden and Sunview are also active in this space, each of them with about 8 to 10% market share. But Pekat, on the other hand, is a bit different. So while it does participate in large-scale solar project, which about 3 to 5% market share, its main focus is actually still on the residential, commercial, and industrial rooftop solar installation, which are more high-margin projects. Yeah. So now let's zoom in on the solar EPCC players specifically and what is the current state. So right now, I would say most of them are getting busier than they were a year ago, and their order books have hit all-time highs. The main reason here is they are all racing to execute projects under the Corporate Green Power Program, CGPP, before the end 2025 deadline. So that rush is keeping them fully loaded with work. And as a result, we expect their earnings to continue climbing and hit new highs with at least 20% growth in the near term. And even though solar EPCC players are setting on record high order books, there is still more to come. In fact, we expect them to stay busy moving forward, thanks to a new wave of opportunities, mainly from LSS 5, large-scale solar 5, and continued demand for rooftop and solar installation. And in the near term, most of the job flow with most of the job flow will still come from corporate green power program, which has a completion deadline by end 2025. So based on our estimate, CGPP alone could translate into around 2.4 billion worth of EPCC jobs. And after that, attention will shift to LSS 5 and LSS 5 Plus, the biggest large-scale solar program announced to date. So the Energy Commission is expected to roll out a total 4 gigawatt under these programs with a completion deadline by end 2027. So we estimate this could unlock at least 10 billion in EPCC contract. So when you combine both CGPP, LSS 5 and LSS 5 Plus, we are looking at a pipeline of at least 12.4 billion in jobs for solar EPCC players over the next few years. And on top of that, there's also a fresh 100 megawatt quota under net energy metering NEM scheme, which continues to support solar investment by commercial and industrial users. And while the current NEM allocation is set to expire this year, we believe the government will likely extend or expand the quota to sustain momentum. All right, so now let's take a look at how the current LSS 5 project stacks up against the earlier rounds. So if you look at the graph on the left, you will notice that LSS 5 and the upcoming LSS 5 Plus have much larger quotas compared to LSS 1 through LSS 4. So this clearly shows that the market opportunity is expanding thanks to the government energy transition roadmap, which is great news for solar players. And moving forward, we expect this trend of larger project allocation to continue. And on the flip side, if you can check out the graph on the right, you will see that the bidding prices for LSS project now have been trending down. That means the electricity prices solar developers sell to TNB are also falling. This is not necessarily a bad thing. It's mostly driven by the declining cost of solar panels, which has helped them to bring down overall installation costs. So just for context, solar panels typically make up about 60% of a solar farm's total construction cost. So when panel price drop, it gives developers more room to offer competitive bids. Okay, so just to make sure we are all on the same page, earlier we were all talking about solar EPCC players. But now let's focus on the asset ownership for the slide. So far, the winners for LSS5 solar asset were announced a few months ago. What's happening now is that solar EPCC players are waiting to be awarded the contracts to build those projects. So as for LSS 5 Plus, the winner hasn't been announced yet for the solar assets, but it could drop as soon as this week. And as we all know, solar stock tend to move with news flow. So this could be a key near-term catalyst. So from our analysis, we believe that many of the developers who miss out LSS 5 will move to LSS 5 Plus as a second chance. Players with experience in earlier LSS rounds are well positioned to benefit. We think names like SciPark, Malakoff, SDG, Sunview, Jax, and SolarVest stand a strong chance of winning the asset, especially the first three, SciPark, Malakoff, SDG, given their records and previous unsuccessful bids in LSS5. So this round, I also expect to see a higher level of Putra participation that could further boost the chances for Malacca, Saipak, and SDG. So with current solar panel prices, we expect winning tariff to come in between 14 to 18 cent per kilowatt hour, which would support a project IRR of about 8%. So I hope by now everyone got a rough idea of the difference between EPCC players and asset owners. So now let's take a closer look at the timeline. So what investor might want to keep an eye on in the coming months and longer term, because as we all know, solar players' share prices tend to react strongly to the news flow. So for this year, most EPCC players are focused on delivering CGPP projects, which could drive their earnings to record high. And at the same time, we expect to see more job awards coming through soon, especially from LSS5. On top of that, as I mentioned earlier, the LSS5 Plus winners could be announced as soon as this week, which could trigger the next leg of re-rating the solar stocks. And looking ahead into 2026 and 2027, solar players will likely stay busy with the execution of both LSS5 and the upcoming LSS6 projects, and keeping their pipeline strong over the medium term. And now let me quickly just roughly run through the key differences between CGPP, LSS, and the commercial and industrial segment. So specifically in terms of quota, timeline, and EPCC margin. So starting with the CGPP, the quota is about 800 megawatt and the completion deadline by end 2025. And we estimate it will generate around 2.4 billion in EPCC job with gross profit margin of about 14 to 18%. So next, LSS project, specifically LSS 5 and LSS 5 Plus, come with a much larger quota of 4,000 megawatt and a longer deadline running until end 2027. So the expected EPCC value here is at least 10 billion. However, margins are thinner, around 10 to 15% due to the highly competitive bidding process. So LSS is more like a volume game. So lastly, for commercial and industrial segment, companies usually go through the net energy metering (NEM) scheme. These projects are typically smaller in size but more lucrative, with gross margin ranging between 15 to 25%. Now that we have talked about all the upcoming job flows, let move on to the solar panel prices, which I think it is matter because a lot of solar EPCC players, their cost is make up about 60% of their total project cost. So in 2024, we saw solar panel prices drop significantly, mainly due to a global oversupply in manufacturing capacity. So while the glut is likely to continue, we don't think prices will fall much further from here. If they do, most panel manufacturer could start making losses just to stay competitive, and some are already under serious financial pressure. So we are even seeing signs of consolidation as weaker players may exit the market. So while a big rebound in panel prices doesn't look likely in 2025, the good news is that EPCC players will continue to benefit from these lower input costs, which should support their margins. Yeah, all right. So I think we have covered the overall outlook for the solar sector pretty well. So now let's move on to our topics. So in the current market environment, we are leaning towards more on the undervalued, profitability-driven names like Pekat, Swift Energy, as well as SolarVest, the largest solar EPCC player out there. So with contract flows expected to ramp up, we believe there's room for upside surprises ahead. So for SolarVest, uh, yeah, our target price is 2 ringgit 71 cents. Basically why we like SolarVest is that uh, it is the largest solar EPCC player in Malaysia, with the market pie expanding thanks to the upcoming renewable energy projects worth at least 15 billion in EPCC value. We think that SolarVest is in a strong position to benefit. They currently command around 30% market share, and given their solid track record, we believe they can at least maintain, if not grow, that share further. Their order book has already hit a record high of 1.2 billion, giving strong earnings visibility ahead. Yeah. So our second topic is Pekat as a profitability-focused player. While they do have other business segments, solar remains their core focus. On the solar side, Pekat is positioned in the higher margin retail and smaller commercial and industrial space. We think this segment has strong growth potential, especially with TNB 14% base tariff hike under RP4, which should accelerate rooftop solar adoption. So for context, out of 10.2 million domestic customer, only around 54,000 have installed rooftop solar. So the runway is still long. And on top of that, their newly acquired switchgear business, EPE, is a potential game changer. EPE is already one of the top 4 medium voltage switchgear suppliers to TNB, and it stands to benefit from TNB massive RP4 capex rollout. So there's also additional upside as Pekat leverages its network to tap into more private sector deals, including DC data center. So the acquisition also comes with a 10 million profit guarantee, but we are forecasting earnings of 13 to 15 million, at least 30% higher, suggesting room for upside surprises as RP4 spending ramps up. So we have a target price of 1 ringgit 75 cents for Pekat. And for our final topic is Swift Energy Technology. So with a target price of 54 cents, which are offering more than 100% upside. So this is a differentiated play in the solar space. So Swift Energy is the only certified provider of anti-explosive solar PV system in ASEAN, and one of just 6 globally. So what makes EX solar system unique is that they are specifically designed for hazardous environments like offshore oil and gas platforms, where strict safety regulation mandates such certified system. So standard solar system simply don't meet these stringent safety requirements, posing compliance and safety risks. So Swift key growth driver lies in riding the global net zero push within the oil and gas sector. And uh, there is a clear trend of offshore platform transitioning to renewable energy, and Swift Energy is very well positioned to supply EX solar solution for both greenfield and brownfield projects. And and of course, there are concern around Petronas capex cuts. Clean energy, I think that clean energy allocation have remained steady with Petronas consistently committing at least 2 billion per year to net zero efforts since 2022. And currently, if you look at Swift Energy revenue from EX Solar, it is just about 32 million. So suggesting plenty of room for growth from this low base. And on top of that, regional players like PTTEP, PTSC, and uh, Pertamina are actively expanding their renewables push. So in the brownfield segment alone, we estimate an addressable market of at least 868 million across Malaysia and Thailand. So with over 50% market share in ASEAN EX solar segment, we think that Swift Energy is in a strong position to capitalize on this untapped opportunity. Yeah, so yeah, I think that's all from me. I will stop here, and I hope this give you a clearer picture of the solar sector. So if you have any question, we will now move on to Q&A session. I will hand things over to Adrian to moderate. Thanks, everyone.
Wow, Nigel, I just love how you have shared the solar sector in such a simplistic manner because it's just so easy to understand after following your flow where we start with the asset players and also the EPCC boys and the differentiating factor. So there is a question from Andrew where SolarVest share price has been on uptrend since July 2023 and now has since hit a resistance. Do you think there's more upside and what's your target price? We shall start with Andrew's question, then I follow up with mine if there's none.
Okay, so basically, I think if you look at my target price, of course, it's 2 ringgit 71. There is still ample room to reach my upside. So I think in terms of renewable energy, everything is just started, and government has a very clear roadmap to, I mean, to support all these solar. Other than solar, is all the waste to energy and bioenergy, all sort of things. So I think if you look at the market pie, is getting bigger and bigger. Uh, so for instance, LSS4 is only 800 megawatt, but now LSS5 and LSS5 plus is around, I mean, total is around 4,000 megawatt, which is more than 4 times bigger than previous. So I think with SolarVest, it's only like 30% market share, and if they able to maintain, at least maintain or increase the market share, I think their revenue and their bottom line will be grow substantially lah.
Oh, there's another question, but just to follow up on SolarVest, right, Nigel?
Mm. Yeah.
Between the other players, I think what sets SolarVest apart is they do have a very clear direction of where they want to maintain themselves as the leader in the EPCC while maintaining if I recall properly, is about 30% mix of revenue as an asset manager. So in the likes of the future, like once the in 2027 has come off, right? Do you think that SolarVest will potentially shift a little bit more into the asset ownership?
Okay, so yeah, of course they have some of the asset ownership. So if So moving forward, I think asset, okay, if let's say there will be more LSS going forward, I believe SolarVest will participate and get more get more asset from it. So basically their business model is that they try to have 30% of recurring income, which is the sales of electricity generated from their large scale solar to Tenaga. They try to get a 30% recurring income. So the rest of the 70%, they will try to ramp up their EPCC. So with that, I think that it is quite stable. And moving forward, I think they will distribute some dividend.
Oh, okay.
Yeah,
That's
this is what I
good.
believe. Yeah.
That's very good news. So seems like s- they have not been they've grown quite a bit, and in the three companies that you see, I mean there's almost 50% upside for SolarVest, but between in terms of valuation, would you think that if there's a choice, would you pick SET first, Percat, or Solar? The first one that you want to come into your mind. Because
Uh,
valuation standpoint wise, I think where SCT is actually really attractive, just that the size of its company is a lot smaller, so probably it do deserve a bit of a discount. But while per cut, it has a niche factor where I think if we were to look into it, we will want to be buying into the switch gear story rather than the solar play. Yeah.
Mm. Yeah, so if you ask me my top one, so for now I will go for Peugeot because of course they are profitability driven, and of course I think they are cheap for now compared to other solar players. So for Pekat, I mean, they have a few LSS projects, but they are not really going big on it because, as you
Mm.
know, LSS project is the margin is quite thin. So
Yep.
if the margin is right, then they will just go. So they are very concerned about their margin.
Yep. Protective.
So I think the real game changer here is their switchgear lah. So because RP4 capex is way bigger than RP3. It's almost double. If I'm not mistaken, it's almost double.
Mm.
So from there, Tenaga will need to invest more on the medium voltage switchgear. So with the current 10 million profit guarantee, I believe it is very conservative. So based on my forecast, I forecast around 13 to 15 million, which can give a
Mm.
more upside from there.
Yep.
And
I
and
noticed your
especially and
I
especially
noticed
when you
your
think the panel prices is at the bottom, I would like to focus more on the margin side lah. Those company that are concentrating on the margin, so like Pekat.
mm, I mean, Pekat has his name lah. The margin a bit gao lah, huh?
Yeah.
Yeah, gao, Milo gao gao, right? So, but I also noticed one thing in particular where I think your forecast is a bit ahead of the street. Would it be a bit too optimistic, or you think it's just the market is just too conservative?
I think the market is just too conservative, and the market for them, they forecast the medium voltage switchgear is still, they still based on the profit guarantee. But now I believe
Ah,
most of them they starting to change their forecast on their switchgear side lah. They
they
believe
have not
now
really
they
factored
believe they
in the
can
growth,
reach. Yeah, they believe they can hit above the profit guarantee for now. And also, what what interesting is also their solar side. Their solar side also came above all of our expectation. Is because I believe now most of the solar players now they work with telco companies. So basically, they work. So for instance, let's say Pekat work with one of the telco companies. So the telco companies Pekat can tap into all the telco companies' database, to ask them to install the the rooftop solar. So from
Interesting.
there, I see there's another growth There's another new kind. Something new in the market.
Yeah, I mean You're meaning to say the telcos are cross-selling solar panels, lah?
Yes. So it's more like they sell it like a bundle. So back then you remember all the telco companies, they lock all the customer by selling the phone. It's the one
Mm,
ringgit thing.
yeah, yeah,
Yeah. So now
yeah.
they bundle it with the solar panel.
That would work. All right.
Yeah, yeah.
So I think I've deviated a bit from the chat box question. So let's come back to that. Mitri Ng, thanks for your question. His question will be the latest incentive, the crash and cream. This is something well, crash and cream sounds
Mm.
creamy, But yeah, what's the potential capacity arising from these two incentives? And how does EPCC player benefit?
So for press, I think most of them they are looking for, I think in terms of capacity, they are looking for around 2 gigawatt, which is around like LSS5 capacity. So basically, Crest is something similar to something like CGBP. But the
Mm.
main things here, the main difference here is Crest, you need to pay the wheeling fee to Tenaga. Yeah,
Oh,
so basically, I think the off-taker would be all the MNC companies like Google, Amazon, or maybe all the data centers lah. Yeah, so for Cream is like for the residential area, you can rent your rooftop to solar players to install the solar panel. So for once you install the solar panel, the solar power producer they will use whatever electricity generated from the rooftop, they will send it to off taker that is like 10 km away from your house, from the residential area.
it's
So
almost like a private grid.
yes, you can look at it this way. So basically, all this scheme is benefit to all the solar EPCC players. They got more jobs to do.
Okay. So
Yeah.
there's one request, it's not a question. Since you're at Prakat's slide, can you try to zoom into the total cost, bottom right column, so that viewers can find out more this from CM? Can just try zooming it in.
Can I zoom?
Yeah,
This is,
yeah,
oh, sorry, pekat ah.
yeah, Prakat.
Pekat.
Yeah, the total cost from yep. But you try to drag it to the middle, yes. Then we can resume our question from there.
This
So
is more on
guys,
the
I
TNB capex lah.
yeah. So coming to Imei's question, if we look at weather condition Malaysia, we will encounter monsoon, how does this player can provide electricity or without breakdown, more rain? So Imei, I think probably Nigel can reiterate on the difference between uh, asset owner and the EPCC guys. What EPCC guys do? Yeah,
So basically, EPCC is like a contractor lah. So EPCC stand for Engineering, Procurement, Construction, and Commission. So meaning that you have a land, they will help you to design and help you to design the solar power plant. Then they will help you to install and construct, and after that they will help you to test and then to commission everything. Basically, that's the gist lah. That's the gist of it lah. And then about the monsoon one, I think so of course solar, you can only generate all the electricity during daytime,
yep.
but uh I know it is not very sustainable, like after night you can't really generate all the electricity. So now the government is looking at battery energy storage system, so to make it
That,
more consistent. So now moving forward, all the large scale solar, all the solar EPCC players must install the battery lah, to make it more consistent.
so they have a cycle backup when things are not so great.
Yeah, so moving forward, we will see more interesting news on interesting things happening in solar lah, not just solar panel itself. There will be
Seems
more
like
battery.
seems like our energy commission has been quite savvy in evolving around the development of the sustainable energy, right? Apart from just solar itself, now they're introducing the storage. And I think today we also saw a news on waste to energy from Malakoff. So, what's your take on that?
I think waste to energy in Malaysia, there are not much player doing waste to energy, but based on my knowledge, based on my understanding, is that a lot of waste to energy plant, they are not making profit because of the tipping fee. But recently I met a few companies, they say that government has starting to revise their tipping fee. So I think this is a very good news for them because by increasing their tipping fee, they can become profitable lah. And in terms of tariff rate, of course, it's higher than solar power producer. But the thing is, their capex is very
Higher,
heavy lah.
higher.
Yeah, way higher than solar.
Okay, let's come
And the
back to
IRR should be almost the same, around 8 to 10% IRR.
okay. So let us come back to question from the floor. Next one will be from Iqbal. For NEM, out of the 10.2 million domestic customers, how many of it are landed properties? I guess this question we should check with Clement, right?
Hmm.
Real
So
estate.
so this 10.2 million is the I wouldn't say is per 10.2 million can be high rise. It's based on the year count. So it's a bit hard to get the exact numbers of how many is it from landed, but based on my own calculation, it's around 60,000 to 70,000 residential area that install solar panel lah. This is what I just want to show lah. How there's still room to grow lah in this segment in the rooftop solar. So it's just assumption lah. It's just an assumption.
Okay. I mean, it's a hit thing when we all come out for lunch and everyone is showing off how much electricity they have saved on their handphone, right?
Yeah.
Yeah. So the next question will be from CC. What's your opinion on BM Green, which also owns the solar firm plus X Energy? X
Okay.
Energy.
All right. So BM Green, I did cover them. So BM Green is a bit different. So they started off as a bioenergy player. So bioenergy is, I mean, for them is quite steady. And then recently they acquire two solar firms, which is, I mean, they are more focusing on residential. So I think right now they are trying to grow more on the residential side. So the shareholder of BM Green is QL Resources, Family Mart.
Mm.
I believe with their experience, they are very good at marketing. I think that they can really penetrate into this residential side. They will become one of the top five players. I believe lah. That's my take lah. So I
So
think
this,
in terms of growth, it will be. I think I will look at least 15% 15% growth in terms of earnings, 15 to
but
20%.
is the management easily accessible as compared to the other players,
Yeah.
or they're a bit
Yes,
more
yes.
shy?
They are quite transparent now. They are quite transparent.
They
So
have
so
been
this year,
some less
these few years,
shy,
their
lah.
growth, so these few years, their growth is more on the solar side lah, not on the bio, because bio, currently all the planters are still focusing on replanting. If you're looking at the CPO price, it's quite flat now. Although it is high, it's still flat. So the planters will not try to spend their capex lah. They will try to, I mean, just do whatever they can and I mean, don't really spend on their capex lah.
Mm. But I think on the biofuel wise, there's always the feed issue where they have problems occurring the rubbish, right?
Yes, correct. So that's why BM Green they are really focusing on all the oil pump players. So
Mm,
so if you look at the oil pump players, they because all their plant is near is at somewhere far away from the town or maybe the
mm,
substation. So they need to sell consume
yep,
their electricity. So that's why they
yep.
need bioenergy lah. And they have a lot of feedstock. So yeah. So that's why they are able to do it.
Cool. Okay, next question from Mitri again. What's your opinion on Norton Solar, the newly listed EPCC?
Northern Solar, yeah, is
There's
a
a cheeky smile on
new
your
new
face,
new
man.
new kids on the block, yeah. But I think in terms of earnings, we will see growth, just like the others EPCC players. But I think now if you look at the valuation, is cheaper than the rest. So I think if you want to play, you can play just based on the valuation side lah. So I think now all the solar EPCC players, they are currently trading around 28 to 30 times. But for Northern Solar, they are trading around 15, 18-ish, around there. So I think there is still room to grow lah. I mean, they need to show their result first, show their numbers, so they can get more confident lah from the investors.
Is there a unique proposition for actually, if I were to look at from a different angle from Mitri's question for Northern,
That's all
is
lah.
that Northern Solar, is do they have any unique proposition like Pekat or even SolarVest? Because if I were to dig deeper, right, not all EPCC players are made equal because there are certain EPCC players less do perform less lah, because their margins could be a lot more compressed due to various reasons.
Hmm.
Yeah.
Okay, so for Northern Solar, I mean, they are new. If I'm not mistaken, they started their business around 2017 to 2018, which is much later than the rest of the players. So I think this is why they couldn't get as much as market share I mean, they couldn't get so much market share compared to the others like Pekat lah. So Pekat is very good at residential. They are top. I would say they are top one in residential, in terms of
Mm.
residential. So Northern Solar is, I believe it's around top 20 lah. I believe lah, for
Because I'm
residential.
trying to get a sense that if I were to take a look at SolarWest, they take up 30% of market share in LSS and all this, and they have 30% of recurring as an asset owner. That's their gameplay. And while Percat, while they are the largest leading in terms of residential, they are in also the catalyst where the switch gear might turn on with a very good volume due to the MV side. But the other players, if I were to dig deeper, is like they. Would you agree that they could be just a plain vanilla contractor that's trying to fight the market?
Now I think I yeah lah, I will believe so lah. I will believe so. So I think in terms of Northern Solar, they need to build more track record first lah. Because
Mm,
people would go for something like bigger and longer,
yep,
right? In terms of track record.
yep.
So because they also don't want to bear the risk. If let's say I install solar panel, I don't want to face, like, if there's something wrong with my solar system. I couldn't find the EPCC player. So that's the only risk lah for the
Yeah,
consumer. So
the
that's why
after
they will.
sales service support.
Yes, after sales service.
Okay, okay, that's a good point. Okay, moving on to Richard's question. What's your honest view on Sunview versus Norton Solar? Well, I
Mm,
think all our view are honest, right? So Swear to
Yeah,
God.
so Sunview and Northern Solar is not how to say, I wouldn't say they are a direct competitor. So Sunview is more on the LSS, the large scale solar, while Northern Solar is more on the residential, commercial and industrial. So
Mm,
For Sunview, they are. I think upcoming you will see exciting news for Sunview lah. I believe this is based on my own assumption because I think they will win some solar power plants under LSS 5 plus with such a big capacity. So this is what I believe. So Sunview is very good at ramping up their order book. But one thing I am a bit concerned and I'm a bit scared is more on the margin side lah. To
so
be
you
very
think that
frank
they
to you.
can do better to improve on their margin side?
Yeah, they need to do more on the margin side lah. They cannot like cut I mean cross I mean just to lower their ASP to gain market share lah. So I believe back then when they just IPO, of course their margin is lower. I believe this is one of their marketing strategy lah to gain more market share to be more well known in the market. So for Northern Solar, I think they are still new in terms of LSS. They have not done any. If I'm not mistaken, they haven't done anything on LSS. So I believe, because they just IPO, I believe they need the money to scale up all their projects so they can get even bigger projects like LSS lah.
Mm, okay.
So
Okay,
if
the
you ask
next
me
one.
between these two, I will play more on the valuation side lah. So I will buy the cheaper one like Northern Solar lah.
Or probably I will just go with Berkat or SolarVest.
Yeah lah. If you just want to compare within these two lah, these two.
Yeah. So the next one will be from Srihon. Hi, Srihon. Good evening. How is solar sector impacted by US tariff that the oil supply and affect Malaysia companies? I think it's a good deal, right? Over flooding
Uh,
us.
I would say because okay, so if you look at because the tariff is just solar panel. If you export your solar panel into US, you will only charge the so-called the tariff lah. So if you look at the global demand, US is only about 5%. So the global demand, I mean, the biggest one should be China. China, I think, will be around 55 to 60%. So I think no, not much impact, not much impact on the tariff side.
Mm,
But maybe I would say, it could be a warning sign for all the panel manufacturer lah. So they might need to close down some of the plants because they keep ramping up their capacity last few years. So yeah, so probably we will see some close down on the panel manufacturer side, meaning
mm.
that the panel prices would likely at the bottom for now in 2025 based on my own analysis lah.
Okay, let's track the prices for this year.
Yeah.
Next question will be from Lee. What's your view on Jack resources?
Chat resources, I would say I didn't really
Track.
I don't really track Jack's resources lah, but I believe they are one of the winners lah for the LSS 5 plus in terms of asset because if you look at their portfolio, I mean for solar portfolio, they have presence in LSS 3 3 or 4. So I think they are one of the potential winners.
Hmm. I mean, I used to cover Jax in donkey years ago, but
Yeah.
Jax has a very different value proposition in terms of its balance sheet. While the thematic might be on solar, I think for Jax we need to dive deeper into this balance sheet and check out what is still in there. Yeah, because I think I've not tracked it for a while, but they do have some asset that needs disposal quickly to unload their balance sheet. Yeah, but I hope I'm wrong. So let's check Busan announcement again. It's not too far off. I shall check it later. Yeah. So from Stan, Which company provides services to install and complete the best BESS?
BESS, so now I think BESS is still very new. I believe like biggest player like SolarVest, of course they can do it lah. So I mean all the listed co, I believe they can do it, but in terms of private side, I'm not too sure. I believe most of them they can do it lah.
Okay, cool.
But now the concern
Okay,
is more on battery prices lah. Because now battery prices is like panel solar panel prices back then. So panel prices back then in 2010 or in 2015 is way too high, is way too high. So now it's like almost like 90% drop lah from 2010 onwards. So I believe battery we will see the same trend. So for now it's still expensive, but moving forward I believe the prices will drop significantly.
probably they might refit the EV cars, man. I would have done that, portable power bank. Okay, there's a question from Comfort where it's quite interesting. I can only find SolarWest warrants CK. Where are the other two warrants? So, Comfort, I've actually shared you a link on Naga warrants where it is Naga. Once you click it, it's in Naga. You land yourself into Naga Matrix. These are core warrants, and if you can't see the core warrants for the other two, meaning that there's no issuer that's issued anything on them just yet. But I think SciPark do have also. Speaking of SciPark, debate a bit. What do you think about SciPark, Nigel? I mean, new management, Maybank team that is looking to put a lot of effort. Do you think we should keep watch on this stock for now to see if the turnaround is going to happen?
I think it is worth to keep an eye on it because
Mm,
this company, I mean, to be honest, they are very they are in the solar business for such a long time. I think it's
they're the
one of the
pioneer. Lah.
earliest and the pioneer. So I think now the only concern is more on the balance sheet side. The balance sheet is very stretched. If you look at their debt, if I'm not mistaken, will be around 1 billion kind of debt. So I think for now they are trying to restructuring their companies to pay down
Mm,
their net debts. So by doing that, their interest costs will be lower. So right now, the thing that hurts them is the interest cost. So once they
yeah.
settle their interest costs, they have to I mean to get to I mean back to the game lah to get more solar asset and then just do whatever they are very good at. So it is worth your time to
Worth
I mean
waiting a
monitor
bit.
the stock. Yeah.
Yeah, I think because I think this Park is a bit unique because I think they have take a few boxes. First, they are Boomi company. Second, they
Mm.
are the largest asset owner, and just I would like to see how the restructuring happen. Be quite interesting.
Yeah.
Okay,
So
but thanks
yeah.
for your comment on that. Let's
Mm.
move on to Jeff's question. Zef Tan, can you comment a bit on SolarVest cash flow, balance sheet, and profit margin? Why are they more superior? And then we will follow through with the last question from Stanley. And yeah,
Sorry, SolarVest again. What's the question again? The cash flow
how is the
margin?
cash flow, balance sheet, and their profit margin? Why is it more superior compared to the other boys?
Okay, so of course, SolarVest, they are the biggest one. They have track record. So people would appoint people like SolarVest, which is the biggest one. Then I believe SolarVest has like how to say add value on their services. So for instance, let's say LSS project, you need to submit all the paperwork documents to the Energy Commission. So SolarVest will help you to do like everything lah. So it's more like a one-stop solution. So you just tell SolarVest that I want to go for LSS. You help me to do the rest. So SolarVest will do everything. So that's why their margin mm, can be higher than the rest, and also they have the skill to scale up all the projects. So they won't really. They outsource some of their project, but compared to the rest, they can scale all the projects lah by doing all themselves, not just outsource.
Hmm,
So in terms of cash flow, they are still positive because uh, they 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 have solar plant to, I mean, it's more like a recurring income. So for them, it's like they can get all the recurring income and spend on the new asset lah, to build a new asset.
So the strategy for now of a 70-30 mix is still quite decent.
Mm. So if
Future
I'm
proofing themselves while they can.
yes, so they are, if I'm not mistaken, right now is still they are still net cash. Yeah, for now they are net debt, but if they need to get more, I mean, get more loan to scale, I mean, to get more solar asset, they can easily offload all their asset lah, some of their asset to the third party, so they can get cash lah. It's like selling property lah, selling property to another people.
Okay. So the last question will be from Stanley Stroke Ame Water Solution. Is that a company? They're doing quite a good marketing there, by the way. Thanks for sharing. Malaysia solar players are mostly EPCC. Do we
Mm.
actually have any solar panel manufacturer or even EV solar charger or BESS suppliers in Malaysia?
Solar panel manufacturer, I don't think we have for now. If we have, I also don't dare to touch because because if
Yeah,
you are
prices,
competing with
right?
the Chinese players, so Chinese players, all the solar manufacturer, they are making losses just to gain more market share. So solar panel manufacturer in China is like they are playing cash flow game. So whoever can survive, they just exit the market and let the giants to take over. So to gain more market share, then maybe the tier one will still continue to survive lah for them. So probably for them, I think right now in 2025, most of the solar panel manufacturer are still they are still looking, they are still looking, I mean their internal target is still making losses lah for this year, but not as much as last year. They try to increase their ASP lah.
Okay. But I don't think it's working. Looking at how
Yeah.
you have set us the price, right?
Yeah,
So,
so for best it's the same thing. Like it's the same, it's similar to solar panel. So supplier wise, I'm not too sure. I'm not too sure about our Malaysia side. I'm not sure who's the supplier for now. But I believe it's still Chinese player lah. It's still China, mainland China.
I would presume so because their technology is quite
Yeah.
amazing. But yeah,
And they have the demand there lah. They can scale up easily. Unlike Malaysia, because the demand is just, I mean, in terms of Malaysia, demand is just very small compared to Malaysia. Very hard to scale up.
yeah. Just to follow up on Stanley's question, since he asked about the alternative supplies, what do you think about cable players? LV, because now power consumption is going bigger and bigger. Uh, LV is moving to MB. I mean, not the LV brand, by the way, and MB is not Mid Valley. It's just low voltage and medium voltage cables. Have you actually checked out or peek into some of these companies out there?
I don't really follow I mean specifically the cable player. I follow more on the M&E lah. M&E means mechanical and electrical lah player.
Ah,
So it's under my coverage. So Pekat is also one of the M&E player lah, you can say.
so
Because they are supplying the
they can actually compete with MN Holding lah.
Uh, yeah, but MN Holding is a bit different. They are building substation. So for Pekat,
Ah,
they are supplying switchgear. So
okay,
a bit different model lah.
they could be their vendor lah for
Yes,
MN.
because all the substation you need switchgear to, I mean you need switchgear lah. You need switchgear to do it.
Switch gear sounds like a cool term, switch and gear. Yeah,
Yeah.
okay, cool, cool. So, is there any more questions from the floor in the chat box? By the way, just if there's no question, I have a question. Do you like this style like Belajar Sedikit, where we adopted from Keluar Sekejap, where we have a bit more interaction and we learn a bit more? If you think it's good, we can actually put one in the chat. I'll volunteer myself. two for no lah. But if there's actually no more question, probably we want to learn a bit more on what do you call warrants. And I will be introducing Isabelle, the gorgeous lady that has changed the landscape of warrants in Malaysia and how we actually view it, apply it, and also take on it with confidence. Most importantly, in the market, I think where we set ourselves very differently is we need to be able to learn to take on the market confidently. And yeah, we are with you on that. And without further ado, can I invite Isabelle? Hi.
Well, hello. Adrian, if I hear another pekat joke, I'm gonna lose my mind. Thank you so much, Nigel.
Thanks,
I
thanks
really
a lot.
enjoyed
Thanks.
your session. I'm really impressed that you can tolerate all of Adrian's bad jokes without cracking up. So that is a compliment to you. It's very impressive. I nearly died. I had to turn off my camera halfway.
Okay. Uh,
Oh,
so yeah, we are all
well.
quite excited to see what you're gonna share with us today. We are perpetually learning because it's a sophisticated product, but it's learnable, definitely learnable.
Agreed. All right. Can you guys see my slides yet? I'm looking at the second screen. You guys don't seem to be able to see my slides, eh?
Not yet, not yet.
Strange, strange, strange.
While Isabel is pulling out her slide, there's a reminder. We definitely love your feedback. So I'm gonna post this feedback form link for you guys. Do fill in, do try to fill it in. Speak your mind. Your mind is important. I can't guess through the screen. So yeah, that's the link for the survey. Do help me out because without you guys giving any feedback, it's very hard to improve. But yeah.
Adrian, looks like I have the same slide problem as before. Just give me a second to send it to you, all right?
No problem.
Yeah. In the meantime, I'm gonna show you guys something. Tell them how they can win this, Adrian.
Ooh, this is Mr. Pa, right? Can I get it? Like, where do you get it? Oh, wait, there's Invest Fair this weekend, right?
Yes.
Oh, can I actually participate because I'm actually the one administrating the gift.
Okay, so that's one thing we're giving away this weekend. And let me show you something else that we're giving away. We're also giving away these. Tell them how they can win it, Adrian.
Oh, is that a gold coin?
It is, it is.
Uyo, ini Wang Mari ya. It's a gold rush, guys. I'll see you in Mid Valley. If not, I'm gonna, song up the gold and Mr. Pa. But yeah, do pop by. You will stand a chance in winning that. A second.
Alrighty, so Adrian's going to share my slides, but today we're going to cover 5 key things. And for structured warrants, like we always say, it is a condiment. It is a little side thing that we do to amplify our gains in terms of the underlying. So earlier, I had a question that I saw from the floor, and we had a individual who asked, "What are the 3 warrants that we can offer?" Right? We've got 3 warrants in the market. SciPark, we even have a Malakoff warrant, SciPark CI, Malakoff C64, and Solar Vest. If I actually look up my screen, it is a Solar Vest CK warrant. So these 3 are the ones that you can consider. However, I don't recommend the SciPark warrants. If you look at our Naga scanner, it is showing an orange highlight. So that is always not recommended at all. So yeah, Adrian, do you manage to pull up my slides on your side?
On the way, on the way.
Alrighty, alrighty. But besides that, we are having this invest fair this Mid Valley this Saturday. And I'll be speaking the same thing as well about structured warrants, but mainly about the different conditions you can use structured warrants. It's a panel session. It is happening at 2:15 to 3 p.m., I believe. And if you happen to be on our other side of Pahang, we also have another event there as well. So do join us if you have the time. And please take the opportunity to win these things from us because we've got a Wake Up to Go campaign and we've also got a Visit SGX campaign where you can win tons of stuff. And like Adrian mentioned earlier, we are giving away these magnificent gold coins.
Okay, is there anything on my screen?
I see a nice, beautiful AG at the moment.
Hold on.
Ah, there we go. Sorry, Adrian, I need your assistance to help prompt the slides today, all right?
Oh, no problem.
All right, thank you. So let's get straight to it. Today, I'm going to cover 5 key topics. Then, of course, that's me, your speaker. And most importantly, Adrian and I, we do hold the CMSRM in Module 6 and 7. That means we're licensed by the Securities Commission Malaysia. Next slide.
Oh, the awards.
Yeah, the ones in red are the ones that have been won by the Naga Warrants team and myself, which we're very happy with because it's good to know that we're on an international standing. Thank you. Next slide.
Weapon of choice.
Yeah. So today we're going to cover a bit of weapon of choice. So this is Q2 out of my series of 5 questions to ask yourself. Number one, we always ask ourselves, so what? How does this news or how does this webinar even affect your portfolio? So some of you might not even have a solar vest or even any kind of solar sector exposure in your portfolio. So the key thing you need to ask yourself is, all this news, is it relevant to you? You might have picked up some things that you can cross use to your other sections of your portfolio. So the first question is weapon of choice. If I look through the left-hand side, there is the asset class, and below that it is issued by, traded on, liquidity, lifespan, pros and cons. So cute, Adrian, you're circling for me. It's okay, don't worry. I can do it. This is so sweet. On top, you'll see that there are different products that you can use. For example, bonds, it's a fixed income product. For ETFs, the reason I did the pink color arrow up and the blue color arrow down is because these are products that can be used in both markets. So there are only 3 things that the markets can do. To me, it's very simple. Life can only have 3 solutions, 3 outcomes. Number 1, the market can be in an uptrend. Number 2, it can be in a downtrend. And number 3, it can be sideways. So these products, for example, an ETF, you can make money when the market is going up or that particular ETF is going up accordingly. And if you have an inverse ETF, you make money when the market is going down. Secondly, for shares, you can have that pink color as well. You make money when the market is going up, but you can actually make money when the market is going down via IDSS. Well, only for intraday trading. For options, same thing, both sides, uptrend, downtrend. And for structured warrants, I did an extra long arrow you can see over there because it goes to show that it is a pink color, very, very long. That means it's leveraged. So a small movement in the underlying can have a large amplification in the position. And finally, mutual funds, or they call them unit trusts in Malaysia. It's only single direction. It is only if the market goes up, you make money in your unit trust. If the market goes down, sorry, that's really it. You get a sorry. Actually, you'd be lucky if you get a sorry. Next slide. If you feel free to screenshot the slide if you want. Right. So going on to it, I went into even greater detail from what we have online. So for those of you who are not familiar, I know these days with our abundance of information that we have all over, it is hard to picture what product does what. So 1 second you're maybe in Singapore and people tell you, oh, everybody there is trading DLCs. And then you're in Hong Kong and everybody says, oh, you know what? Everybody here is trading CBBCs. And honestly, it doesn't matter. The one thing that matters is you need to know the three directions. And then you choose your weapon. Warrants, ETFs, CBBCs, REIT, futures, forex, crypto, they are all tools for you to be making money. So let's go through this slide. This is the main chunk of my session, and I won't take too long. I only have about 10 minutes with you guys, so I'm going to go quick. First option, right? First eventuality of life. Number one, uptrend. The definition for this is higher highs, higher lows. The market is rising, ideal for capital growth strategies. Below that, I wrote equities, growth stocks. You can read all of this in your own time. But the derivatives, and what that means is the position that offers you leverage. These are the bottom. I wrote structured warrants, call warrants. They leverage on rising stock prices. Bull CBBCs, futures if you have a long position. Options if you buy a call. Options as well if you have a covered call position. And CFDs if you have a long position. And of course, crypto if you're for aggressive investors. And we have a tokenized at Kenanga where you can gain access into that. The reason I didn't write Forex is because it is not licensed by the SC in Malaysia. But when it's a product like that, it doesn't have my vote of confidence just yet because things can go wrong very badly, very fast these days. Second eventuality of life, besides death and taxes, downtrend. So I wrote over there in the middle chart, you can see that the market is falling. Take advantage, embrace the volatility, embrace the downtrend. The reason is because there's the adage that says, the bull walks up the stairs, but the bear jumps out the window. That's why you see whenever it's a downtrend, it is aggressive. Gravity helps. You put a sad face, but Adrian, I love downtrends. I make the most money in downtrends because it's fast. Derivatives that offer you leverage include structured warrants, put warrants. They profit from falling stock prices. Bear CBBCs, short positions on futures. You can buy puts for options. CFDs if you go short. Inverse ETFs, which they have in Malaysia. Bonds. I put this as a relatively stable returns. It doesn't really give you money, but it kind of protects you a bit. And money market funds, capital protected structured products. And finally, third eventuality of life. Liao Yuk Long, Kenanga warrants issue more put warrants? Yeah, we can. But the thing about it is, let me give you a quick snippets into the mind of a warrants issuer. For me, if I'm a warrants issuer, I like to have two positions. I like to have a call and a put together. So if the call warrants sell very, very well, then I would like to have a put position as well. Because what goes up doesn't go up all the time, right? So yeah, Yup Long, for your question, why don't you just put in the chat which put warrants you would like, and I will consider it. Finally, third possibility of life, consolidation. The market moves sideways, and I know everybody is excited and hoping for a rally and hoping for a rally, but a rally, let's say, KLCI trends sideways 6 months in a year. Let's say it's out of 12 months. 6 months is sideways. That means 3 months maybe uptrend if you are lucky. 3 months downtrend if you are unlucky, right? So if I have that kind of positioning for the market, I know that KLCI is going to be sideways 6 months. At least I can steady my heart. I don't look for the lottery. I don't wait for sunny days before I buy something. I know that it's going to be 50% of the time, there is going to be clouds in the sky. So you would consider things like dividend stocks, ETFs, and REITs. But if you want derivatives on it, there are bond ETFs, autocallable structured products, and more importantly, which I didn't have in this slide because I had a new deck of slides, which can be shared today. You can actually engage with SBL, securities, borrowing, and lending for sideways markets. So as you can see on the left-hand side, the uptrend, I wrote in green over there, leverage via margin or discretionary financing. And on the right-hand side, if it's a sideways market, I can consider something like SBL, securities borrowing and lending. So that's why Kenanga is a full range broker, and we even have structured warrants for uptrend, call warrants, and downtrend, put warrants. So I hope that gives you a nice big rounded picture about what there is in the market for you. Next slide, Adrian. Okay, I'm not going to cover this one. Next slide. Next.
Next.
Yeah. Thank you. Next.
ROI.
Next slide. Next slide. Thank you, Adrian. All right. And finally, so what is the purpose of that derivative column I showed you at the bottom, right? Just now I showed you the normal products that you're familiar with. And I showed all of these fancy names like covered calls, structured products, and derivatives. Why do people bother with the worst, not the most sophisticated products and learning so many terms? It's because there is a position for it. This is called the barbell strategy. And for this portfolio, let me give an example of 100,000 ringgit. Same thing, it works for a 10,000 ringgit portfolio as well. The reason is, let's say there are three columns over there that I wrote. The first column, it says buy FD. Second, it says buy ETFs. Third, it says trade HSI. So let's say if I put, I do a 30, 50, 20. That means 80% I put 30K into FD, 50K into ETFs. Fixed deposits will give you gains, the ROI of 3% roughly. If I buy ETFs, the Dow Jones Industrial Average has performed 8% in the last 15 years. So that is really a no-brainer. But if I trade Hang Seng Index, it can give me something like 50%. Now, all I have to do, if I only bought FD and ETFs, stable products, reasonably capital protected products where you don't really have to worry too much about it. You're not expected to trade it. This will only give me an average of perhaps 5-6%. However, if I input something like a derivative, a structured warrants, HSI, for example, which very easily brings in 50%. We had a warrant last week when the Hang Seng was rallying. I had a trader tell me he made 241%. Now, the reason I tell you that you put 80% into a more less larger proportion into the less risk reward side is because you only put in 10 to 20%, for example, in a higher risk product. So even if it goes 50% down, you're only having 10 to 20% in that product. If you look at the bottom, I did the math for you. 30K times 0.03, that means 30,000 or 30% of your portfolio times 0.03, that's your gains, plus 50K times 0.08, that means 8% returns, and 20K times 0.5, which is 50%. If you average that out, your total ROI is 14.9% per annum. Now that's a lot sexier and a lot more worth your time than always just trying to hunt for something. If some product is offering you 6% and you're so hungry for 6.5, this is the attractive part of structured warrants. Now, finally, let's wrap up the last few slides. So let me see what I have in this old deck. Next. Next. Yes. And just before that, Adrian, and like I said, 3 eventualities in life. So the most important thing, besides learning about the product, is identifying what the trend is. You only have 3 children. You need to memorize their names, okay? And one child is called uptrend, one child is called downtrend, and one child is called sideways. So this is the same chart. This is a Hang Seng Index. And up, down, sideways, it depends on the time frame. For example, the uptrend that I showed you there, it's from 1998. So you can copy it if you're not sure how to draw technicals. 1998 all the way to 2022. And this uptrend is still valid in my newer slides. Now, if I look at the one below where Adrian has beautifully written the word down from July 2022 all the way to 2023, I can see that it is a medium-term downtrend, and therefore I must act accordingly. And finally, let's say even if it's sideways, and this was a one-day chart, I can see that the black line to the black line, it is a sideways range market. What I did was I just want to give you an example of how the Hang Seng Index offers you something every single day. 22,000 to 20,200. If you minus that, that's 2,000 points. That is 2,000 points over 2 weeks. And if you look at the bottom, the HSI, if I do 10 cent minus 8.5 divided by 8.5, that's how you calculate ROI. I take the new number minus the old number divided by the old. That is 17.6% in 2 weeks without much thought. That is for 500 points. The Hang Seng moved 2,000 points. That means 4 times more. And I'm assuming that you and I are the worst trader ever. You caught it halfway during the trend. You didn't manage to maximize. So anyway, that wraps up my session for structured warrants. We do hope to see you very soon, especially if you're in KL. I'll be there most of Saturday, but especially at 2:15 p.m. And so will Adrian. And our team would love to catch up with you, and I would love to chat with you if you happen to be in KL. If not, we have plenty of these webinars, which we do every single month with Adrian and myself. And our 3 campaigns, which we've already mentioned earlier, as well as our KDI Go campaign for the
Yep.
gold, which
Go
is
rush.
here for us. That's all.
Okay, see you guys. Thank you, Nigel, for your time, and thanks, Isabelle. And most importantly, thank guys for joining in tonight. We definitely love to see you at Mid Valley this weekend. Mr. Pa is waiting, and gold coins are screaming, take me
I
home.
stole Fion's Mr. Pa to give you an example. They're exceptionally cute.
Hey, but the skull panda is actually very nice, skull panda. See, so
Okay,
cute.
the skull, yeah, I think it's cute too. Okay, next events, I'll consider the skull pandas. All right.
Yeah. Okay.
Like,
So
it's so cute, like Nigel's face.
My God.
I almost sell Nigel and sell Senro out there, but he sell ideas, he don't sell body lah.
Cannot, bro.
Yeah. But yeah. Anyway, thanks guys for joining us. We hope you all learned something. I definitely learned a bit from Nigel, a lot from both of them. And yeah, we are constantly learning. So stay tuned for more events. And without further ado, good night, guys. See you on the next one. Do come to Mid Valley, yeah? Bye.